India and investors and promoters being ROE obsessed.
Why India has not made investments in new age? Why Infosys and TCS have not made investments in Anthropics? Because the Indian public frowns at anybody who buys a loss-making company.
What are the deal breakers for you?
Just every day at 9:15, the stock has traded already very lakhs of shares and the stock is a 4%, there's no need to, every day. There are so many stocks which every morning would be at limit in 5 minutes and at 3-4 minutes just traded millions of shares. This is some circular trading.
What are the sectors on your watch list going forward?
In the case of Reliance, it is that we now hope that there are a lot of unlocking triggers and stuff like that, Geo and all that. And HPCL it is very cheap and has a good dividend yield. We don't like the Uznep consumer stories, the 3% money stories. So we have these hotels and hospital, you get called whatever you want to call it, and then we have these Zomato types. Basically consumer spending.
Thank you so much for joining us on the podcast.
Thank you very much. Thank you. It's an honor to be here. First time with you guys.
So sir, I just wanted to understand Helios Capital Management, right? Which is a Singapore-based entity. It was already doing quite well. So what motivated you to start a mutual fund business in India at this stage of your professional career? What I'm trying to say is you were well settled, everything was...
You could be retired by now.
No, that's not what I meant, sir.
So the way it works is, so we were running from 2005 a long short fund. And then from 2011 Jan, we were doing a PMS with an Indian mutual fund. We were their 50% partner for that product, not obviously for the fund. So, but before that, I am from the mutual fund industry and I was the first mutual fund manager. After that, I was trying to start my own mutual fund. I was trying to initially buy the Alliance mutual fund when they were leaving. So, mutual fund ka keeda tha. Second thing is I like lecturing, talking to big crowds. I like public. I like to travel. So, but anyway, so in 2019, we realized that we were primarily raising offshore money and investing in India. And in this one case, we had this product where we were not raising, but that AMC was raising money and we were advising it. That the market had become big. So we said, let's do a PMS AIF at least. Because anyway, we were doing it with a partner, we can do completely on our own. And then everybody's applying for mutual fund and now we have the money to do it and we have the comfort of doing it. So we applied for that license. The mutual fund license takes nearly 3 years to 2 years. Nowadays it takes maybe a year. So we got that approval and I'm telling you, I have got a second lease of life. Because my first lease was too standard. Too standard. I go once to US, once to Switzerland in the summer and Feb, March way to US, talk to some 10-20 guys. The total investors you have are 35. And you are saying, okay, give more money and they give or they don't give. And this is different. This is now and our performance was very good, which you can see online. But that performance, when the public sees, there is different fun. If they are also there. Here is a very... Like you are talking to a very boring fellow on the other side. Once in a while he's become your friend. But broadly it is a very formal... I go to different cities. I must have gone to 40 cities in the last 2 years. Okay. Oh, everywhere. One day, where do we do? Oh, samosa khate hain, batein karte hain, and then you get money. It's great. It's fun. And the whole firm has got bigger because of size. So that also helps offshore. Because also you see there are more people, so there are no career path for the individuals who are, otherwise I was the fund manager. And True. Even the senior guys like Dinshaw and Rani and Abhay were basically analysts for me. So Alok was my trader and my number 2. So everybody gets some, that also all the money being made at that time may have been more than what you will make now. Okay, because of being a hedge fund. but it is needed, and then you realize ki it's useful and plus it's fun, really fun.
Correct. No, that's what I was wondering.
And I'm trying to play a Charlie Munger type thing. I want to go till the end and work on Warren Buffett. Means in terms of age, not retiring, not thinking for 1 second that there is such a concept and I don't even want to do it. And can't even imagine those things. And my classmates have retired from IM and all. Many, not all, quite a few. Not recommended, I would say, to retire. Many people on Twitter talk to me, not to me, but generally they're talking how to be retire. I think don't say retire. Financially independent doesn't mean you have to retire. It means you don't need it. But you have to. You can't say, I play golf every morning with us. Everyone get bored after 30 days of golf also. And then they have less to talk about because they are spending 4 hours a day golf and they go home and sleep. But my classmates maybe, who have done this.
Very true, sir. You got this mutual fund license after 3 trials, right? So first, second, and on the...
No. Those were not trials. Those I was trying to buy the alliance and Birla got it or whatever. And then I was trying to do this thing with Sabre, which was Rana Talwar, who was the CEO of Standard Chartered Bank. I was trying to start. What I'm saying, the mutual fund idea was there. And then now they say, they've been saying forever, third time lucky. So this is my third time and it has turned out to be quite okay.
Yes, they say third time it's a charm.
Okay, third time charm or lucky.
Anji. Sir, now we'll talk about the elimination investing framework in a bit, but I just want to understand if I have to describe Samir Arora as an investor, right? How would I define it? A value investor, growth at reasonable price, or you don't follow any of these acts?
I would like not to have this. Even if you see our portfolio in India or on an offshore fund, on one hand we have HPCL, which might be a 5P, very low P stock and small value, and we have Zomato, which might be 1000P. So my idea is that first of all, please think. So all these guys, all the fund managers, not just me, all these guys. First of all, we are managing money in 1% or less of the world market cap. The world has market cap, India has one. My classmates, some of them, not all, who went to say me to Wharton or even from IM, they say we are global fund managers. So they are managing money in 30 countries. Then somebody will say I'm a hedge fund manager. So he will say I'm managing money in 30 countries, plus I dabble in commodities, plus I short. Then somebody will say, well, I also buy some inside pocket private equity investments. अब हम पढ़े लिखे आदमी आ गए, हम ना इंडिया के अंदर 10 स्टॉक में इन्वेस्ट करेंगे. मैं क्यों भाई? First of all, our market is so narrow. To make it even more narrow, why we are not intellectually this thing to be able to justify one stock because it is high growth, but and there's a price to be paid for it or whatever, and there's a big future, and there's one stock. Why can't I reconcile to both? Why can't I say that this also makes sense in its own way and this makes sense in its own way? So all my life, I have had all kinds of stocks. It has to appeal, and also in a portfolio, you have to say, okay, don't overdo this or overdo that. So that part is fair. But to say, I only do this, who told you only do this? They can show you 1,000 people on the other side. So I read books on Buffett. But I also read books on traders. No, I read trader books. I read Soros ke upar books, Michael Steinhardt. It's not that I say, I don't read books on what hedge fund managers. That is what I mean. So I will like to be classified as, so in our mutual fund, we have this tagline, har term ke liye. Because when you are thinking of it, people say, so are you long-term investor? Somebody will say, I look at it with a 10-year view. So after 8 years, if you come to me, I say, no, 10 years are not over. I always told you we have a 10-year view. We don't do like that. We want to do things on a regular basis as the horizon of the investor. It's not that we thought of it like that, but that's how we have evolved. And secondly, I can't be that for 5 years I will wait, because today is the growth cycle and I'm a value investor. And then when my turn comes, I'll make so much money that I'll make up for all the period of underperformance. But that also is a model. We say, no, we want to go along. And plus, more than that, we like buy anything that makes sense on its own. And then later on, you have to fit it in a portfolio by saying, don't overdo one concept. So that's why no definition is better than a label.
Okay. Sir, one more thing. If I look at your portfolio of at least Helios, Flexi Cap, right, in India, you have a lot of new age companies.
Yes.
So from Ola Electric to Physics Wala to Zomato. And
We don't have Ola, but yeah, we have others, yes.
okay. So what I wanted to understand was, I've heard you talk about your experiences when you were in Alliance, right, in the 90s. And even at that time, you were taking calls on new businesses.
My returns came from new business. Yes.
So, sir, I just wanted to understand, is it the same philosophy or is it something different?
No, I don't know whether this can't be called philosophy. This is more maybe whatever natural or not being so cynical. I am not cynical. For everything I don't say, no, can't happen. I give chance to the guy to tell me his story, and many times I like the story. But big picture is as follows, that in those days, it was very easy to imagine that you should buy new things, because the new things that were happening were previously being done by government companies. It's not that they were not being done by anybody other than IT, which was anyway new. But let's say Doordarshan was there, and then Z came. So it was very easy to imagine that Z's programming will be different. They will show more movies, more songs, and more entertainment. And Doordarshan is doing more education and more news and politics, whatever. So I imagine that nobody's going to watch Doordarshan if Z's programming is like it is. So because of that, Z, suppose, was bought. So that was, you can say, new business, but it's not a new business. It was a new, even banks. Like I was very early in HDFC Bank on day one. So HDFC Bank is not the bank is new, but it's a new business because the private sector bank will have less political interference. They will have maybe better technology. Their branch will look better. Their service will be better. So on those concepts were these. But only IT was, you can say, completely. Then we had Hero Honda. Or at that time, it was only Hero Honda. So Hero Honda was there, and all those were easy to say compete with the older established guys. And IT was separate, and somehow we bought that also. So those were great. So now it's not that I am remembering that and buying, but that means I give benefit of doubt to new. So today the story is that, first of all, people think these are new companies. But they're not new companies. They've been around for 7, 8, 10 years in private space before they go public. And less than 5% of companies go public and 95 go to zero. So when you see these PE guys people saying they have made a lot of money, they have made a lot of money in that company which has finally been able to reach public markets. And baki they have lost. So it's not your hero. But so therefore, first is don't write them off on day one as if some new fellow has come to you. Second is, if you can imagine that there is either something useful they are doing, which was not being done before, and it fits into and because these days the older companies are growing at very low rates. IT is growing at, what rate you grow at, but consumer is growing at 5-6%. You need some jing bang also, na? Which is what I was saying. I need all kinds to be a har term ke liye. And so we got Zomato perfectly at 52 and we got Paytm at 500. But Paytm then went up to some 900, 1200 and then fell to 300 or 400. So that was the test. So things like that. But the point is, all these guys have created proper companies. It's not that every company, just because it's coming on IPO days, loss making, what has happened? Nothing has happened. That is how life is. Now you look at it. Why India has not made investments in new age? Why Infosys and TCS have not made investments in Anthropics, which everybody, not us, but they could have got, because they must have been in that ecosystem. Because the Indian public frowns at anybody who buys a loss-making company. Wape now Anthropics is 380 billion. Do you think in India, now of course people know, but do you think before they knew, people would have put $1 from India, any family office? Nobody. So at least we are buying a listed company, not an unlisted. I don't buy. Even personally, I don't buy, because even I am of that training and background. But listed way to buy a little bit, we feel is fair game. And mix and match, you make okay money, good money. I mean, sometimes you lose, sometimes you make. So this Ola, we bought at 45 rupees. Okay, it had fallen from 160. Finally, we didn't like the fact that service was not made properly, and so they sold it off. But I'm saying, if you buy also after it's fallen, you're not losing your complete pants on these things. But you lose a little bit and you say, okay, let them repair, then we'll come back and see. Cool.
So in fact, something on the basis of what you were saying makes me curious, and I've read some articles to that extent, that India and investors and promoters being ROE obsessed, right?
Correct.
We don't get to invest or venture into newer avenues, something that you already said.
So the reason for that is India did not have money. Indians did not have money. These promoters were middle class. Yes, we were lower class. Everybody had no money. So first of all, you are always cynical. You believe that this guy will run away with my money. Because people do run away with more money. Maybe they run away there also, but we know our experiences. We don't know their experience. So everybody has lived in a shortage. Then the third thing is, because there was shortage, the guy who did something new even in that area did okay in life. So it worked out us. And then we had these MNCs which did well as stocks. But these were all cash earners and this and that. So those got 60 multiple in US, nobody will give them 50. Here we also buy some of them at 45 multiple and all. Because what to do? Because the whole system has become risk averse and dividend yield and all that, which we have it in a package.
Got it.
We'll have some stocks like that, but not the whole portfolio, because when I got up from my sleep, my father told me you should be value investor. No.
When you were at Alliance and you were taking calls on these businesses that were new, at that time you mentioned that it was easier to see that how they'll grow because they were filling in some space. I just wanted to understand that do you have the same feeling about the new age companies now?
So what happened at that time was these companies went public when they were very young. Okay, so I think when we bought Z, its market cap was $50 million. And we put $2.5 million and we had 5% of the company. Same thing happened with Kotak Bank. Kotak Bank, which was not even a bank, just around September 11, that is 2001, ke maybe 2-3 mahine plus minus, it had a market cap of $50 million. We again put $2.5 million and bought 5%. Because $2.5 million also we didn't have from one fund. From our offshore fund plus Indian fund, it came all together. Okay, that is what the idea was. We used to buy 5-10%. We bought 9% of Trend. Its market cap was, I think, 200 million maybe. No, not even 200 million, maybe 200 crores maybe or something. Okay. When it was Lakme. Then we bought 5% of Pantaloon. That I know we bought it for 30 million market cap. So $1.5 million.
Wow.
So the idea there was that these things are not there in India, but they're in the world. So for Pantaloon, our logic was we used to cover Korean stocks because I was Asia from that. So Shinsegae is a Korean company. It had a market cap of 2 billion and it had some 60 or 80 stores. So that means each store was valued at $30 million. 2 billion divided by 60, that's the total research. So I said, a full company is $30 million. Then I bought one company which turned out to be zero. I forget the name, would G said how. It was an IT company. Its market cap was 8 million.
Okay.
So I told my guys, I said, if this fellow had been working in Intel with those Intel was the hot stock, his ESOP would have been worth 8 million. Yeah, bichare ne, he has worked for some 5-10 years. He has some 200 people running around. And his market cap is 8 million. So it's 5% leke aage chalo, we'll see what happens. So that one, in the end, went to zero. We may have sold it before it went to zero. But what I'm saying is, those were new, very, like HDFC Bank, we bought in the IPO. That IPO was oversubscribed 52 times, if I remember. Okay, and then we bought it listed at 30 rupees. Whatever. So, these are very new, but we can understand the concept of bank, but it's just that he's doing it in a private sector setting. Now the issue is these companies come to you very late. They come to a 10 billion market cap. So it's not easy to say, oh, you need 10 billion and let's buy it. 10 million, okay, let's buy and see what happens. Okay, and the second thing is because the seller that time used to convince the promoter, if he Sir, you are selling only 25%, you are owning 70% and 5% your brother is holding. How does it matter to you? Let us make 5% extra. Us means the market. In the IPO, and if there's a pop of 10%, we'll be happy in life. And therefore, you will get full loyalty from. But if it falls, it will be very bad. Now, the seller is bloody my competitor, P fund. Okay. वो कहता है कि I want everything. Then he says after 1 month I will sell more. I mean whatever, after 6 months I will sell more. ये वो. They are very different. So therefore now it's not easy because, and if it is really good, they will delay it even more. The IPO. Because they say we have 10-year life, 7-year life, and therefore sometimes the growth is squeezed out before they come to the stock market. So now your returns can't. Plus, there are too many fund managers also now. So now it's not that game. That game was a fun game.
So one final question about history and now. I just wanted to understand that has your investing style changed over the years? How has it evolved? Or is it largely the same?
But previously I used to be very quick. Now I am quick. But previously I used to go to a meeting and blow it off. Okay. Because there was less analysts, less this thing. So once I was at I used to do this mutual fund presentations, like you talk. Even now we do like your talk. But that time we were doing more with the direct public because the banker would organize who's selling the fund. Say Citibank is doing. So they will call their high net worth investor. Even now they must be doing. I don't do it because I am now here. So वहाँ पे एक बंदा कहता है कि I read that पता नहीं BPCL or some stock you had is your top holding. Actually, by the way, a few days it was my top holding. Can you imagine that? Okay. So I said, no, I don't own it anymore. So this was like a monthly which has come like 3 days ago. And I went top holding, number 1 holding. Okay. So he says, your top holding, so can you talk about it? I don't hold it. I don't even have one share. He says, I said, let me tell you one thing. When we buy shares, we buy them with utmost passion. And when we sell them, we are even more passionate. Things like that. Basically, I used to be more aggressive.
Sir, now let's talk about elimination investing framework. So if you can explain to the viewers briefly, how does that work?
That for your viewers is the easiest thing to do. No other formula works for them. According to me, I've explained. So people say that we will buy, if you ask a particular retail, which might be your audience or high net worth, that we buy good companies and we hold them for the long term. So our whole job is to find managements we can trust. When are you meeting the management that you can trust them? The fund manager who says I am meeting the management, he's also meeting them for 1 hour every 1 year. He might be meeting IR guy every day, but he's not meeting CEO every day. If he's meeting CEO every day, then the CEO has no work. Then that company cannot be bought anywhere, right? So the point is, nobody knows what is a trustworthy company or a management. You are looking at the results. And if for 5-10 years those companies have done well, you say, I trust this management. But by the time you discover or reach the stage of trusting the management in that way, that means 5-10 years have passed.
Yes.
So for example, we say that we own Kotak for, no. So if people say we buy good companies and hold them for the long term, so they'll say, give an example. So I'll say I bought Kotak in 2000, whatever. Although I changed the job, but in theory, if I had not changed the job, we have held it for 25 years and the stock is up 500 times. So this shows that if you buy a good company and hold it for the long term, you make your money. Oh, wrong answer. Well, how did you know in 2004 that it is a good company? You have realized it now because it has done well. Then actually it's a good company. Because in between, Mr. Kotak did not do anything wrong, did not do minority shareholders, whatever, unfair, or did not issue warrants to himself, or did not do whatever. Now we say good management. So how would you say then? Nobody knows. We bought Bajaj Finance in 2011. Now there is no logic for the management of Bajaj Finance in 2011, which is the same guys, Rajiv Jain and even Sanjeev Bajaj, to think that they will one day be worth 50 billion. How can they even think? They have no background. Rajiv Jain has come from Citibank. Every NBFC CEO has come from some Citibank or America. So it doesn't. But now we can say, nobody knew this. So this idea that I will buy good companies and hold them, sorry, even the managements don't know that they are good. For example, the owners of the founders of Netflix went to a Blockbuster Video to say, please buy Netflix. 50 million market cap, 50 million total. Now they are buying a company for 100 billion, this owner, whatever. So that means they didn't know. Acha, so I own HDFC Bank for, even now I own, unfortunately, last 3 years have been disaster, but anyway, I own it for 25, 28 years or 30 years. So do you think that in 90s, Mr. Aditya Puri never sold any ESOPs of his thinking that, this stock is going to go up to 500 times, so I should not sell my ESOPs and I can borrow money in the meantime? No, he must have sold it, right? I don't know exactly, but he must have sold it away. So everything he sold in 98 and 99, he could not have done anything better than to keep it in HDFC Bank. So nobody knows. So for us to say we buy good company, so therefore if there are many companies, if we can just eliminate the bad, what will be left is not good. What will be left is not bad. And then some will turn out to be good. In English, otherwise I can explain more. But what I mean is, your money is being made in companies that you thought were okay. You want the good you think, and they turned out to be better than. If you knew they were good and the market knew they were good, then they are like the companies now which are trading at 50, 60. Everybody agrees they are good. And to come to this stage, to realize that they are good, you have to see them for 10 years, 5 years, whatever. So by that time, the first round of return, suppose you say, I like Dixon is good. But Dixon in the last 5, 7 years must have gone up 20 times. How could you say in 20 it is good? You didn't know. Now when you say it is good, it's up 20 times already. So therefore we say eliminate the bad and pray for the best. And pray for the rest.
Okay, so basically,
So that is what elimination is.
Hypothetically,
so we found 8 factors which we think are normally associated with prospective bad performance. Like one is very high balance. One is very low growth rates, like this IT niche is rejected. We don't care whether it is negative or not, but we know it is very low because they themselves are saying 2%, right? Or it could be that it's very bad history. Or you could say it is an industry which is very competitive, like in the olden days it was telecom. Or you could say this industry is very much government policy driven, just a fertilizer industry. Or it could be very global, tea, or something happens in Kenya, stocks fall. So as I say, you keep eliminating, saying this is too complicated and this. Or you could say that so many people have reported, even if you don't know, that these guys have poor accounting, or we find some accounting, or somebody else found that it has bad accounting and you just kept it as a diary. Okay, this one I agree with what. They don't need to, everything cannot be done on your own, but the world is doing and you have to remember and log it. So once you eliminate the bad, your error cost comes down a little bit. That is the basic picture.
So I have a question on what you were saying, that you eliminate and nobody can look into the future and say this will grow 50 times, 100 times, whatever. But then when you're picking a stock, right, how much into the future do you look at? How far do you look at?
So our idea is that the long term is a series of medium terms. So 2-3 years. Means if somebody says to me, okay, this is a 5-year story, I know ki was again the thought. Why you came to me, why couldn't you tell me it's a 2-year story? The fact that you told me it's a 5-year story means my long-term story hai. Abhi pata nahi. Why are you calling it a 5-year story? Say it's a har term ke liye story. It's a 2-year story, then it become a 5-year story, then a 10-year story. If you say it's a 5-year story, I'll tell you, okay, call me after 3 years.
Yes.
Correct? Why should? Point is, if somebody is saying straight away to you, this is very good for the long term. Iska matlab hai, abhi there is very big confusion. And our formula is that the promoter also does not know. It is not enough to say that I will rely on a good promoter. In the beginning, every promoter is okay. When he's graduating the first day, he's not thinking I'll cheat people when I grow up. What things happen which you also don't know. He also doesn't know that he will become bad. And people get situations in which they are stuck or they are chores also from day one, let us say. But not everybody is like that. Or people who do badly. You may call them chore, but they are not chore. It did work out. So I have this favorite book called The Halo Effect. So Halo Effect से अगर वो चल गया तो सब hero है. Then he is a great man also. Even though he was chorifying, but the stock was still doing well because the industry was good or even maybe his business was good, but he was still stealing. So now he's not a good management that way, but the stock is delivered. So you can say he's the most respected guy in our system.
So I have one more question about elimination investing that we are talking about. Sir, if I look at promoters in India, so if I look at businesses in India, most of them are promoter driven. And
Yes.
if I look at the history, almost every company had some issue or the other which
Correct.
somebody can classify as corporate governance issue.
Yeah, correct.
Be it HDFC or Infosys,
Everybody.
like everything. So what are the deal breakers for you? See,
So the
कहीं
deal
ना कहीं कुछ ना
breakers
कुछ तो होगा.
हाँ correct. So deal breaker में सबसे पहले होता है कि towards shareholders. So for example, now we know that our banks, big banks, with RBI just said don't be selling. We know okay, you go for mutual fund, they sell you insurance. हमें नहीं पता, सबको पता है. But we let it be. What to do about all these things, right? But some things are against the shareholders. For example, there were many companies, and we really then stick. We don't say that 3 years have passed and all that. So these guys would issue warrants. So they were big group, the big company, and with group also you can say. So they would issue warrants to themselves. So they issued in one of the listed. So suppose the strike was 500, and then you had to pay in those days, initial days 10%, and the rest to be paid over 18 months or whatever. So you pay 50 rupees. Now, when you're beginning, you are paying that, you are justifying, saying that the company needs money, and so I will put this 500 crores. Now the stock fell to 400. Suddenly the company doesn't need money and the warrant issue is cancelled. 50 rupees are lost. So, okay, nothing wrong. But at 400, you do another warrant issue. Now at 400 again, an issue has been done. What the hell? That means you are only interested in buying it with 10% money and a 18% upside. You are playing the game the second time. So things like that. It's a big country. So anyway, so point is sometimes you personally get this thing. Otherwise, you are only seeing in terms of, if they have too much of trading in the stock. Sometimes the brokers tell us that somebody in Delhi is manipulating the stock for them, things like that. It's very blatant. Otherwise, some things you can get from the screen also, which means that if every day, it's a tip to them, just every day at 9:15, the stock has traded already very lakhs of shares and the stock is of 4%, it has been right. There's no need to, at least every day. There are so many stocks, which every morning would be at limit in 5 minutes. And at 3-4 minutes, it has traded like millions of shares. This is some circular trading stroke rigging. Because no fund manager wakes up in the morning and says, bang it up every day for days after days, which many stocks do. So some of those we have saved like that by, but at that time there's a story around that stock.
Oh, okay.
But obviously there'll be some story. This has got this. So it's not that people will say we don't know. They'll think maybe because of this it is going up. We said nobody gets up early day morning to bank the stock. And then they fall in if they do, which many of them do.
But since we started talking, right, you have mentioned IT, I think 8 or 9 times. Now, IT company.
Why?
Now,
I didn't mention. Which one did I mention?
No, talking about the sector, you've mentioned the term IT, like the IT companies, gave example. 7 or 8 times you've mentioned IT companies, right?
Okay, please.
While giving example. Now, according to what I've read and watched, right, it gives me an impression that you don't particularly have great liking for Indian IT companies. So I just wanted to understand just 2 questions here. One, why is that? And secondly, with the disruptions happening in the AI, right? Do you think that they don't have a very bright future?
So first thing is that I owe my career to IT companies because my alliance, I became number 1 because I bought every IT company, and I went, I think, 55 times on Infosys. And Satya, I used to again own some 3-4% of the company, but not in 8. These are the 90s, some 96. We had India's biggest IT sector fund called the Alliance Global Millennium. Then I was running Asian Technology Fund, which had some 25% in India, which was all these IT guys. And till 16, 15, we would have had, normally like everybody, 18-20% in IT. So we became near zero because we always had one stock broadly, some stock or the other. But we became near zero in IT in 22. And it had nothing to do with AI. That was to do with the fact that in 22, US interest rates were hiked a lot from 0.35 to 5% or something. At that time, they had not been hiked, but they were being hiked. And second, the Ukraine war happened, and we said X% is in Europe, is that, and we sold it, and then we bought these new age companies. So we were one company which we used to have, now we don't even have that, but we used to have, and then up to 24 we didn't have a single IT or whatever, very low IT. Then in 24, when the Indian elections happened, and the government's budget, that interim budget was a bit boring, that they did not say much about, defense, railways, all the things that we had. We sold off and bought IT. IT was always kept pushing me, so IT le lete.
Okay.
And then in 23 Feb, we again went at zero. And now we have at zero. Again zero means near zero. And now it is because of AI and other things. That time these were different things, but different this thing. But from 23, around March 1st day or some middle, we sold every IT stock for every portfolio. The India, we all agreed totally that it is seriously affected. So first thing was that these guys were guiding very low growth rates. Pehle to aap you see, they themselves are guiding for 4-5%, 3%, 0 to 3%. That itself is boring to us. Second thing is, during the same time and even till now, the Indian GCCs are coming up in India. Now people say they are not competitors, they are a competitor. Because you're basically having people in India, you could very well have had them under the IT companies. So if you look at it now, maybe last year the numbers were a little different, but big picture, some 20% of employees currently are in GCCs and 80% are in the IT companies. So I don't know exactly, but let us say 6-7 years ago, the GCCs were near zero. That means GCCs have taken away per year 3% of the market.
Yes.
With 0 se 20 ho gaya na wo. Right. So if you were growing 12%, whatever, 15 above 12 ho gaya. And then came AI. And my main speciality is that I read lots of books which have no connection with each other, but connections are made. This is happening there, this is happening there. I, in maybe 21 or 22, tweeted on this book saying that the future of work or something. I still have it lying in my bag. Future of work or something. Ki what work will not be done, what work will be done. And if you say AI, what is its main objective? Two objectives. So one objective is to do things or help people do things which they could not do. Like, I don't know, drug discovery, some cancer research, some weather forecasting, some nuclear something. What is the second? To do things that human beings are doing. So now what happened is, so we said, no, this is, so then these companies say, and everybody says, oh, as on the other side, that this will make individuals more productive. And the only factor used is 20%. So if everybody in the world, for a large part, for a small part, but everybody became 20% more productive, then that means the US, let us say, should be growing 20%. Because the same people are now doing 20% more work. But GDP growth is 3%. That means people have to go. So that the end growth is 3, productivity is 20% more, and 17% वहाँ चले घूम फिर के got your 3% GDP. So, and for India, if you are 20% more productive, so first thing is that 20% work you are doing for free. Or, so they say, no, we'll get more margin. We say yes. So first you are billing for 100 people at 100 rupees, let's say. Now you are billing for 80 people. How much more can you? You can't charge more. Because the people have become 80. Because 80 people can do the work of 100. Previously you were getting $100 for 10 piece or whatever. तो अब वो 100 वाले को 120 है जो भी करेगा तब वो no way he can get 2 rupees out of it. So suppose he can protect his margin, but his revenue line is affected. Stock market guys don't like lower revenue, same profit. We want revenue also. So on these big picture things, because nobody knows exactly how to point it. The second thing is, once you have taken out that money from IT and you have bought something else, and if that is working plus minus same, it may not be massively outperforming, also doesn't matter, but it's not bleeding you. Hi, IT is going up and I bought Zomato, so what to do? Mine is also going up. If yours also goes up, even then it's okay. If your goes up much more than mine, then I'll have to rethink this trade is costing me money or returns. It didn't cost me, so I continue with it. When it costs me, then I will relook at it. Now, who knows exactly how far to go? But it makes no sense right now, I think.
In fact, for the viewers who are watching this, I would like to tell them to go to your Twitter timeline and see
they are already there.
more of the IT debates that are happening. So moving on to the next question, now that we were talking about sectors, I just wanted to understand. So I went through the Helios Flexi Cap portfolio, which was for the month of January. Right now, things might have changed a lot. So I saw biggest is financial and banks, right?
Correct.
Then is oil and auto. So I just wanted to.
Oil is only one stock, I think, HPCL.
Okay.
And Reliance also, you're calling it oil. Reliance is all this. Yeah, understood. Yeah.
So this is what I saw was the classification. Now, if I have just to ask you, I mean, what are the sectors on your watch list going forward, right? Are these the same ones or are there some different sectors?
So see, basically there are 3 big sectors in the world. These are IT. In India, it's IT services, but otherwise it's IT. And the tech. There's tech. The second is financial. Third is consumer, or second is consumer. So there are 3. We also have 3. So in that 3, and this oil and all is on and off. So, even in the world. So there, if we don't have IT, basically you choose one of the others or whatever. But financial separately, we like, and we always liked, as I was telling you, we used to Kotak from there. Kotak, of course, in a new job we bought later, whenever we started Helios, but HDFC, so I personally also hold from 1995, so all those, Bajaj Finance, I was telling you. So all these companies were always we like, and because in India, initially it was an issue of private versus public, which helped the banks at least. And then later on it became that many of the businesses in India are private. For example, if we Indians are buying a lot of mobile phones, now what to do? You don't know what to do with it, so you can say, okay, buy Bajaj Finance, fund all the consumer businesses, things like that. And also these companies have been a bit more better governance and longer standing and all that. So financials is always, and then in recent years, this capital market related companies came up, CAMs and stock we have MCX and all. So that's where financials will always be. And AMC, we were anchors in ICICI Pru, and then we bought in the market, and then we all own HDFC, AMC and all that. So very easy. Everybody normally likes that. So then the second is IT, so we have made zero. Then in the oil and gas, which you look at it like that, we look at it as 2 different companies. In the case of Reliance, it is that we now hope that there are a lot of unlocking triggers and stuff like that, Geo and all that. And HPCL it is very cheap and has a good dividend. So for the guy who wants value, we have one value stock to show you. HPCL. For the growth guy, we have Zomato. So then the consumer is that we don't like the original consumer stories, the 3% money stories. So we have these hotels and hospital, you get called whatever you want to call it, and that we have these Zomato types, basically consumer spending. So these are the groups basically.
This is existing, but are there any other sectors which you don't own but are exciting you or you're keeping on
No,
watch?
actually, if you say in that way, we own defense one stock, two stock, but that way we own all of us. I mean, I'm talking more from my offshore fund, because the mutual fund is owned, managed differently, but the research and the discussions are
Got it.
somewhat common. So the big picture is that there is no obvious sector that is left which we are not, we are avoiding actively, unless we always avoid it. Like we normally don't buy commodity stocks, we don't buy cement stocks, we just don't buy them, we have never bought them. But it's not okay. IT is different. We normally used to buy them. So that is more focus on that. Other things we anyway don't buy, it is beyond our.
Is there one big risk in Indian markets that most people don't understand or are not discussing or are not realizing?
No. So I don't think like that. By the way, big picture, because I became a fund manager in 1993, the offshore funds, and there was 1985 from the domestic mutual fund. India has been one of the best performing markets in dollar terms. Okay, it has been. And broadly, it has been in every period. But without getting overly out of line, means the earnings growth of India generally, big picture, has been in 13-15% in rupee terms. And then, so the stock market is around 13-15% if you see. And then we lost probably 3.5% on dollar. So our benchmark return was 10.5%. And if you could beat it by 3-4%, we are heroes of the world. That is where we are. Okay. So the point is, it is that kind. Up we think that again, it is in that range. This year was bad in terms of earnings growth. Yeah, maybe 8-9%. So again, for March 27 or March 26, we think that earnings growth will be 14, 15, 13%, which is good enough. It will be one of the highest in the world.
Got it. So one more question I wanted to ask you was to help investors who might be looking at investing abroad. Now, let's say I'm an investor. I have $5,000 to $10,000 to invest abroad. I'm taking this number because a lot of things are opening up in Gift City, right?
In Gift City.
Yes. So, what are the markets that I can look at currently? Should I be like
No.
we discussed, right? US is like 60-70% of the global market. So, should I be focusing on the US or are there other markets? How do I go? How do I go about it?
Even we have given up. You buy world index.
Okay.
If you are very this thing, you can buy one world ex-US ETF. I've got that also.
In your personal portfolio.
No, personal means Aditya another fund, which is a global fund. But in that fund, we realized we are not able to now find stocks which we were able to find. Why? So previously from 17, we've been running it since 17. So what happened is in the 17, 18, 19, even till last year, it was very obvious that you buy US tech. Okay. And so US was outperforming the world and US tech was outperforming US. And our index is the world. So everybody outperformed by Netflix, by Amazon, Google, Microsoft, Meta, फिर Nvidia थोड़ा दिन Tesla, then you buy Spotify, very obvious names.
Yes.
So we bought and made serious money. Now suddenly after this trade tariff and all, because I sold at that time, and then while going back we realized that we don't know now what to buy because we didn't feel like buying those. But now you tell me, a normally Indian fund manager based in Gandhinagar or Gift City or actually in Bombay, how many suddenly realize that Korea is going to do well now? Suddenly next day Japan elections, because see, we were all used to the whole Indian crowd, Indian investor, Indian fund managers knew these 7-8 companies, including us. So we have stopped our global fund now. Stop means we have not shut it. We don't take new money because we told we have in that fund very few investors. All the office guys and a few more. We said, yaar, ab samajh nahi aa rahi ho, kehte jo karna hai karo. So I said, okay, let me do. So we bought World ex-US ETF, S&P Equal Weight ETF. Some stocks are there. Okay, like this one. We had S&P Global down some 25% in 1 week. And then, because now Brazil, if it goes up, how am I supposed to know that Brazil? Oh, I forgot there is a country called Brazil also. So I'm saying it's very difficult. It cannot be done so easily. And particularly from India-based guys, even more difficult because they don't have so many people in so many countries and all. So best is buy 2-3 obvious ETFs. एक वर्ल्ड का ले लो, अगर NASDAQ लेना है, which also we have, NASDAQ 100 ETF. And then one is, which actually is done the best, is the world ex-US ETF because the US is doing nothing compared to what the world is doing, particularly when measured in US dollar. For example, I own Louis Vuitton. I mean the fund. So Louis Vuitton in the new, because we have held it, sold it many times. In the last round, we are losing money on the stock, but we are making money because the euro strengthened 20% or 15%. तो वो हमारे currency में बन गए. So that's what I mean. So everybody should invest, but you cannot. And also it's $5,000-10,000. How will you choose which country and what will you choose? There's nothing to choose. You buy something which you don't have to sell. ताकि tax भी ना देना पड़े बड़े साल. Here there's no tax.
Got it.
We have no tax here on the capital gains. But for in India, you'll have to pay tax. So you can't keep changing countries every 1 year. Don't do any country.
Got it. Got it.
So, even for China, we have some stocks, but otherwise we have a China Tech ETF, which is like their Nasdaq 100 equivalent ETF.
Now, as I understand, your personal portfolio is what I heard you talk about, right? So you are invested in India, globally, and
In my global fund.
Okay, and 10% in gold.
Gold might be little more because it has done well. So maybe 13, 14 over, something like that. Yes. Because I don't every day look at it, but broadly, you're right.
So you own gold, right? 10% or more. Is that
It has become. Because it's gone up so much. So I bought it in 22 because interest rates were very low, and then this war happened. And when this war happened, the feeling among the gold guys, I am not a gold guy, but I read, was that it has a very negative that Russian sovereign money, which was lying in euro dollars, basically the Europeans borrowed it by saying cannot get it back. It technically is not being taken away. It's
frozen.
Its interest, as frozen is the word, but its interest is being used to pay off Ukrainian liabilities or interest to Europe. And in recent days, about maybe 3-4 months ago, there was even this talk that forget about frozen, it should be impounded. Okay, which they have not done. But from that time, people started saying, and I agreed with that, or maybe I thought some of it, that broadly other countries will get upset with this. If there is a fight, if there's something and you freeze my money, money cannot be just randomly this thing. And then many more things happened. So I bought a little bit of gold. The price at was $1,100-1,200. So we are also happy. So when it, as of now, if it does not perform for 3 months, I'll sell it. Because I don't have so much view on it. But right now, it's sort of all the elements have conspired to make me make some money out of this.
In fact, my question was now that do you have views on 1 or 2 other commodities like silver and copper that everybody is talking about, or no?
I don't have. All I know is that gold, there is some logic. But the logic is that you are worrying about US dollar. Basically, that's all made. And therefore, it is being bought by sovereign. And it is being bought by ETFs. And they are holding it. And holding is physical. Even I own ETF only. So they are buying it and putting in a safe. Nothing like that is happening with silver. No central bank is buying it because nobody knows where to keep it. Okay, and no ETF is buying actual silver. Mostly they are buying futures contracts. वो अपने आप ही चले जा रहा है. Then you have to make a story. Oh, you see, it is used in solar panel. And people will steal your solar panel if silver is very expensive and break in plenty panel and take out the silver. So I didn't believe. I am zero. I had zero. I've never had in my life. And neither do I feel bad for 1 minute that I could have had it and I'm not interested.
The last 2 questions. One is, so when you come down to India, like you said, 6-7 times you come here, right? Who are the old pals that you meet frequently? Who are the old timers that you hang out with?
No, so these days, because we have to do a lot of traveling within India, the old pals are only my office guys.
Okay.
But otherwise, all these guys we used to meet, not every trip, but all the guys who you see on TV, we would meet once or twice, every 4, 5, 6 months, not every trip. But all of them. From Jacket one also I used to meet maybe 2-3 times. The office जाके वो तो knowledge भी मिलता है, plus generally to keep the thing going, network, everything. Yes.
Oh, and my final question. So, everybody, like we discussed earlier, a lot of people follow you on Twitter. right? And it's a very, it's fun watching you.
Active community.
Anjay?
It's an active community.
No, but the kind of wits and sarcasm you have, which many people don't get at times, it's just brilliant. And those who get it, they really enjoy it. Now, I just wanted to understand, can you share either like one funny incident on Twitter that happened, or probably one incident that disturbed you? Anything one that's a memory
So
for
the
you.
disturbing one has become less now. A, because I engage. Okay. And second thing is that I block. So I'm quite okay in blocking. So I don't. And I'm a Sagittarian, Punjabi Sagittarian. After 30 seconds, even if I'm angry at fellow, I may have blocked him. But after I don't remember a word. So अब वो upset वाले कम हो गए. पहले होते थे. Because they
Not
will
just
remind
one
me-
memory.
Any,
Either
on
funny
the upset. On the upsetting one, they will remind you that this dog had spoken and that dog had spoken. क्या करें? This is it's better to speak. As long as I am not cheating you, or I am not front running you, I am saying my fund as it, you want, you look at it, you see. But I am not selling it to you, and I am not waiting for you to buy. So I used to get, you see the overall portfolio NAV, that is public document, and mutual fund only we have done mostly. So you go and see, it's an aggregate. So those were there, but now it is less also because maybe the guys who over the years 200 people have been blocked, so they are gone and they start okay. Who knows? Because these things are always done by only a few. It's not that thousands of people are doing it. So on the good side, it is that seriously you see how much love I get. I mean, sometimes you feel emotional. It is. I seriously think if you see my tweets and what they write to me on, when we say that we have, like I wrote once that we had reached 1,000 crores. He said in 2 years it'll be 25,000. Who comes and say? I don't say this to other people like that. I don't say to Mr. Ambani, you will be worth 250 billion in 1 year. But if people write like that, it's very good. So that way, that's why I like Twitter, because it is. I enjoy it, and I only enjoy things when both the sides are having fun and nobody's really. And I give books. If you saw recently, I gave out 100 books, and even last year I gave, because Twitter has been good through me.
Absolutely. Like I said, people who understand your wit and sarcasm are bound to be very emotionally attached to you or follow you and enjoy.
I am to them.
So thank you so much, sir, for joining us on this podcast. Have a wonderful day, and it was great talking to you.
Thank you very much. Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.